The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, folks, well, since we're not having much volatility in the stock market the last few days, I think we'll just probably start off with talking about gold and silver. That's sort of a joke, I guess. I have, as most of you know, and I've talked to several of you through the night with emails and chats and stuff, that it's pretty hard to get any sleep with swings like this. We don't see swings like this in the stock market very often, folks. This is an outlier event, but it's just starting. If you remember 2008, we had the same type of thing. I used to stay up all night during 2008, mostly 2008, playing online Texas Hold'em poker. You buy in for $10, and I would play tournaments just to try to stay awake. Well, I don't do that anymore. They still have it, but I just don't do it anymore. But boy, these swings are just absolutely unbelievable. I'll go through those in a minute, but first of all, let's talk about gold and silver. Silver made a new low, taking out the old low at 1410. There was not much interest there. It went down to 1407, and now it's trading around 1423. But I still believe that we got a little bit more to go on the downside in the gold market. That's the one I'm focusing on because I do want to be a buyer of gold in here. I happen to go along with the thinking of Stanley Druckenmiller that some of this stuff is going to come home to roost in some of this stuff. Anyway, as you can see from the gold chart, we were looking around that 1170 area. That was the 786 retracement of the June high. It was a 61% retracement of the May high. We went up there, and now we've backed off of almost $50 an ounce. And so we're coming down into an area where we should have pretty strong support. That it should be right around 1105, I believe. The 61% retracement comes in pretty near that spot. So I'm going to be watching that extremely closely, along with the it comes in at 1108 is where it is. So we're $16 away, and we'll see if we can do it. Now we're coming down really hard. That usually means you're going to exceed it, so you want to be extremely careful here. And I would wait a day or two. We've got a lot of astrological stuff lining up, folks. It's really serious things happening today and tomorrow. And then on the 28th, we have the full moon with the moon at perigee, where it's as close to the Earth as it can be. It's called Syzygy, and I'll post that into the room just a little bit later. That was some information that Norm Winsky sent out describing, what perigee is and how that works. At the break, I will send that out. But I wanted to go through gold and silver to give you any idea where I think we stand right near. That's basically, the bottom line. It's just a spot of where you want to take a look at this. Now, if silver is making new lows, the ideal situation now is that silver is not going to make any more new lows here, and we're going to be able to look at some stuff as far as maybe a higher bottom in the gold market and lower lows in silver. That's what you'd like to see. But the astrological stuff, you got to respect it here. So tomorrow is Thursday. The way that works is you take Wednesday and you add one day. Okay. Anyway, this is it. It's just I'm a little bit off 100%, probably about 38.2% this morning, but we'll still try to muddle through this. Remember, folks, any market that can give you 100 points has the ability to take the 100 points away from you. And last night, we had the market in the Dow Jones is incredible moves. I mean, let's just go to it, and we'll just do it right now. I copied these last night so that we would be able to look at them, because I wanted to show you what was happening at the time. Now, Mr. Z was kind enough to jingle me at when the S&P was making its low at 1850 to let me know that we were setting right at a big 3 drive to a bottom pattern. And that's exactly what happened. And the market took off and went all the way back up to we went and made the 61% retracement. We've almost made the 786 retracement in the S&P. The ABCD on this measured up to 1923, so we got to that spot again. Now, if we take a look at the NASDAQ did pretty much the same thing. And then I want to this is all funny money, folks, what we have going on here in these markets. I want to show you the real market, which is the New York Stock Exchange Index, because that's the one that really counts. And you shouldn't even, what they're doing in the futures markets is it's bank robbery, but, it's legal. So what are you going to do? Okay. That's what's happened in the stock market so far. Now, yesterday, if you'll remember, we talked about the market going up into the area of the New York Stock Exchange Index to rally up into this area, and we did that, and then we broke down, almost making new lows. And so what we want to do here, give me 1 second. I've got to try to coordinate this so I can get this. Okay, so now you're looking at this New York Stock Exchange Index chart, okay? And I printed this out yesterday, looking to see the rally into this area where we gapped down on Monday. That still holds, folks. I don't know if it's going to do it today or tomorrow or the next day, but you've got to be ready to sell that son of a gun. There's just no other question about it. This is an incredibly bearish market. If you'll notice what happened, back in June, you'll see the line that I've drawn there with those 3 lines coming across those 3 bottoms. And then we gapped down below that last Thursday. Then we broke down on Monday, and we've rallied now Monday, Tuesday. Today's Wednesday. We're rallying Wednesday. We might even rally Thursday. We might even rally Friday. But when that's finally over, it's coming down. And our first target on this is going to be 1,550 on the S&P. And so you want to... Hey, look, let's just relax a little bit, Larry. This is my assumption of what I think is happening. I don't know what's happening in China, but nobody else does either. So I'm not going to worry too much about that. Now, as you can see from the chart that I'm going to post now, that there's been a huge, this is a joke too. This was the stock market yesterday. The advanced decline line and the new highs, new lows, and you can see even with the market up 500 points, and then it dropped 200, it was down 700, and then it's back 500. I mean, back 600. So it's just really amazing the swings that we're having. But boys and girls, this is no different. Think about it a minute. This is no different than what happened when we were trading at 2100. We would go down 2100, we go down to 2080, we go 2080 back to 2100. We did that for 3.5 weeks before it finally gave up the ghost. Now, I don't know when this is going to, finally turn down again, but we're in some serious stuff here. I noticed that China actually closed lower after, all the interest rate stuff that they did, but it did not make any difference to our stock market because it just took right off and away it went. It stopped right at that pattern where it should have, and from that spot, it's held up, extremely well. That's the bottom line of the way these things act. So you've got to pay attention to what the patterns are doing. I don't know the fundamentals of this stuff, but frankly, I don't think anybody else does either. But we'll have to just wait to see what happens. Now, we're going to open sharply higher today in stocks, just like we did yesterday. And remember, we stayed that way for 4 hours, and then we rolled over the last 2 hours. Whether we do that again or not, I don't know. Maybe the people learned their lesson from yesterday that bought that stuff. And, we'll have to see if we go up and make new highs. That gap into the New York Stock Exchange Index is going to be the real key. Tell us that it could be our A made the exact 786 retracement on a daily basis to the exact tick at 39.04 from the October low. The New York Stock Exchange Index expanded exactly to the 1.27 level of the October low. So the overall market is going down. The breadth is bad. We've gapped down below the July lows. Everybody that's bought stock over the past year is underwater. Now, is this going to be a major bottom of some kind? Frankly, I don't think so. I think we've got another series of legs down. What we've done now is we've held up after that monstrous 1,100 point down day, and that's just the beginning, folks. If you remember a few months back when we had a move of 350 points in the Dow, and I said that was setting up for your first 500-point drop in the S&P, that was just 1.618 to that. Well, we dropped 1,100 points down. Multiply 1,100 times 1.618, you come up with 1,800 points, and that will be the next big panic leg down. But the market is preparing you for these things with this wide volatility that we're having. I mean, it's just it's really quite amazing. I mean, it's just everything you could possibly ask for, as far as fulfilling the things that you would like to see as a pattern recognition trader. So that's all I'm saying is we've got to be prepared for it. And so far these patterns are holding up extremely nicely. Now, the next question that someone had was about TBT and TLT, and I'm going to start it out right now, and then I'll have a break here, and we will go into it. Now, first we're going to do the TBT, which is the ultra. Oops, let me blow this up so we can get it on the whole page here. Is the ultra short Treasury bonds, and we have a yesterday we went down and we hit just a little bit below, day before yesterday, I'm sorry. That's when we were making the 162.28 in the Treasury bonds. We're now a little more than 5 handles off from the high, and this has probably made some type of a very strong bottom. This is the ProShares Ultra Short T-Bonds, TBT. We also had a 3 drive to a bottom pattern at that point occurring, pretty much the same way that we like to see them. And now we're going to do, if we have time here, and I don't think we do, but when we come back, we will cover the TBT. We'll cover the TLT, which is the ultra long ProShares for Treasury bonds. And as you can see, we gapped up, and on Thursday, what's today? Wednesday, Tuesday. On Monday, we hit the exact 786 of the March high, and we hit the exact 61% retracement of the January high. So we're going to take a break here, and when we come back, we've got a few requests for some stocks to look at, and that's what we'll be doing.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we've got a question from Lou in Nashua. Is that New Hampshire, Lou?
That's New Hampshire.
Hey, I've never been there, but I've been to New Hampshire, but never to Nashua. What can I do for you, my friend?
Okay, I was thinking of shorting the S&P. I was in it, but unfortunately sold it on Friday morning.
Oh, on the big move down?
Yeah.
Did you get filled very badly, or what was the?
No, I got some profits on it, but I sold.
Okay, well, I am. This is just normal from what I think is happening with the swings. We've just increased volatility by 10 times is all we've done. Our average daily range used to be about 10 to 15 points in the S&P, and now it's closer to 50 or 60. So that's 4 or 5 times more than normal. So if you can, what I would wait to do is, Lou, I would wait to see if we can get into that gap area at 1963. That's where the area where I really think if you wanted to wait, and you might miss it, but I think it's worth waiting on given the volatility that we're having now. That's what I'm looking at. But the market, to me, nothing's really changed. I mean, we've had a 700 point up and 700 point down in the Dow, but it's back to where it was before. We've just been chopping around here for 3 days, and this is normal. This is what happened when we were doing the top, and this is what's going on right now. I don't believe that this is a major bottom that some people are trying to tell us with those gaps that we have, and the breadth of the market is terribly bad. Lou, if you can look into Tiger TV now, I've posted a chart from John Murphy that shows what happened in 2001. If you remember, the market was closed for 5 days, and then we opened, and then it rallied for 2 or 3 days, and then it went straight down from 9/11 all the way down to 9/17. In 8 days, it dropped, better than 14%. So this could be what we're happening right now, is this chopping around. So this is basically what I'm seeing.
I see. What about the gold miners?
The gold miners, I haven't looked. I should look at them because I got plenty of time. I'm up most of the night, but I'm going to look at them a little bit later. Well, the fact is, what I'll do here is let's just do one right now since we're on the air here. Let's just pull up here, and we will come up here to the. Let's just take a look at. I think Newmont Mining is the one.
I'm doing it via the Nugget, NUGT.
I don't have that one, but let me put up Newmont Mining, because that is one that is I've always liked that. Now that's still it's got hit bad yesterday, and it's ready to make new lows. It probably won't make new lows today with the stock market holding up, but I would wait. That's basically what I would do here. This chart is telling us that there's no reason to try to step in here and try to be a hero. This stock went from 16 to 19, and then it's already back to 16 again, looking at those lows. So I would hold off on the miners. There's too many other things that you could be doing that would look better than trying to buy the gold mine stocks right now.
Do you think gold is going much lower?
Well, I think it's going at least $10 lower, maybe 15, because that's where I'm trying to buy it. I'm trying to buy it at 11.08, but gold is acting much better than silver right now, but I've been short gold. I'm out of short gold right now, and I'm looking to try to be a buyer around 11.08 with about a $10 stop, and that's what I'm primarily looking at. The low we made today in silver is very important. We took out the low of a year and a half ago. That was 14.10. We rallied better than $5 an ounce from there. So, and then to come back and make a new low is, very, very surprising. And so, there's so much deflation out there that maybe the gold's not going to work. But, for $10, I'll give it a shot at 11.08. But I'm not having any expectations that it's going to turn right away. But it's just a pattern that I have to do.
Right. Well, I appreciate it, Larry. Thank you very much.
Okay, my friend, and we're going to have some real wild times here in the next few days, but coming in Monday, we're probably going to start another trend. Whether it's up or down, I'm not sure yet, but we'll have to just wait until Monday to see what it's going to be, because we have this full moon coming in here on Friday. Thanks for calling in, Lou. I really appreciate it. Okay, folks, we're going to get ready. We have to take a little break here. And then what we're going to do is we're going to give you a little tiny prep thing on astrology from our good friend, Norm Winsky. Okay.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization memorization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, looking good, Billy Ray. Feeling good, Lewis. Okay, I wanted to share a chart from my good friend Kerry Szymanski. He is a trader here in Tucson with Harmonic Edge. And I'd like to show you this chart that looks really interesting here. This shows you the New York Stock Exchange Composite Index on a monthly basis going back to 1997. And as you can see, anytime we've taken out the yearly lows, that's done 3 times. We just did it recently, but we did it once in 2001, and you can see the market continued to go down. We did it, of course, in 2007, and the market continued to go down. And we've just done it in 2015, but the 2015 is the fastest we've ever done it. This one, came by surprise to a lot of people, so that's what we're looking at. But we got the Dow up about 350 points this morning, S&P up 40 something, NASDAQ up well over 100. They're giving you all types of really low-risk buying opportunities up in these areas this morning, so we'll see. But anyway, that's another factor that tells us that we're probably something really significant has happened. In addition to that, and the reason why I'm bringing these up is because we have all of these emotional things that are happening, and you want to be able to say that at least you had a little bit of common sense and not buy into the real heavily bullish stuff, right away. So just keep in mind that these markets, any market that can give you 150 points in the NASDAQ can take 150 points away from you in the NASDAQ. So just remember that that's what we're looking at here when we're watching these things. Now, let's switch over quickly here. I wanted to talk a little bit about the British pound because we talked about that yesterday. We did get up into that area of that 158 level. That was the Gartley pattern that we were looking at in the British pound. We also talked about the euro up around 117. That was another big one. Now, folks, the one thing that what you're seeing now is you're seeing a disassociation a little bit between the treasury bonds and the currencies. They're getting back to trading against their own fundamentals instead of the fear mechanism that was going on Monday. Monday, scared the bejeebies out of everybody, including this old cowboy, and I thought it was going down. So that's just the first shot across the bow. What we're seeing is going to see a lot of these swings, but we're looking at something that's very sinister out here, in my opinion. The fact that these markets go down 700 points and up 700 points, all that is doing is it's just preparing you for what's happening down the road. This is what's really going to happen. This is different than what happened in 1987. In 1987, we topped on August the 25th. We bottomed on October the 18th to the 20th. The crash was on the 19th, and we stayed there in a trading range for a good, I think, 2 months before we started to finally go higher. But that low was a perfect 61% retracement of the low from 1982 in the Dow Jones and also in the S&P. This is not the case this time. What we're doing now is we've completed that big 5-point reverse point wave in the Dow Jones, the S&P, the NASDAQ. We've talked about that to everyone. And so that's really what we're doing. So keep in mind that, any market can give it to you, can take it away. That's the bottom line. The question that I've just had is what would be the first profit objective on the British pound, and that was just reached here just a few minutes ago at the 155.85 level. That was the 61% retracement of the low we made, back on August the 6th. So that's the British pound. We've already talked about the euro. So these are some of the things that we're sort of watching early this morning here. Okay, now we have another question about the world's most famous stock, which is Apple. If you give me 1 second, I'll put Apple up here. And I heard that, I don't know if someone was certainly joking when they said that we were going to have Amazon was going to guarantee liquor within 1 hour. That's got to be a joke, folks. I mean, come on, give me a break. I can't believe that you don't have to wait an hour. All you got to do is go to your local bar. Okay, now we went down and we had that big gap down on Monday. Then we had the really strong rally, and then the market has done nothing more than backing and filling. So there's really not much going on. The overall structure of the market, folks, looks negative. Even though you're looking at it this morning, just like you were yesterday with the Dow up 500 points, this is what can happen. So the volatility is going to increase. All you have to do is to bide your time. We've got a whole lot of astrology things coming in today, and then again on Friday, which we have the super full moon, where we have the moon is at perigee, as close to the Earth. And I posted into the room today, Tiger TV, the description of this from our friend Norm Winsky at Astro Trends, and he does a great job of describing what it is. It's basically showing you that when the moon is as far as away from the Earth as it can be, that's apogee, and when it's as close to the Earth as it can be, that's perigee. And then you also have to look at the geocentric longitude of whether the Earth is either directly over the equator or the farthest away from the equator. And this one happens to be directly over the equator, which gives it even more importance. So there's a whole lot of geometry and mathematics related to the full moons that we try to look at, but super full moons actually have more power because of that magnetic effect of both perigee and apogee. And apogee is the one that when you have that, a super full moon, a super new moon with apogee, those are the ones where you see extreme action in the stock market, and then also you see a lot of volcanic activity, increased volcanic activity, and also earthquakes. So that's all geophysical stuff. So don't know what it means, but we'll have to wait and see what it means, and that's all we can do. Okay, now, the next thing we want to take a look at is Tesla, the only car in the world that I would never buy. How can you buy a car that you can't hear? Give me a break. I'm from the old school where you had, heavy engines, That's what I think it's all about. My little grandson's the same way, too. Hold on one second, please, and I'll get this Tesla chart up here. Okay. This is one that we talked about several times because we had that pattern with the 135 lower tops pattern that came from our friend Bill Longstreet and his dad Roy Longstreet. We went down to the 786. We rallied back again just like everything else on Monday. But again, all it's doing to me is just backing and filling in Tesla. It doesn't look like it wants to do too much at all at this point. Now, we've had a question about the wheat market. If you'll give me a second here, I will pull up the wheat market. I'm watching that one very closely for a potential buy, and we're just going to put up Christmas wheat here. And we've had some pretty big swings through here, and we're almost coming down again for another retest of the 786 retracement. Give me 1 second to clear out this, and we'll see where we are. Okay, hold on. We're not too far away. Well, we hit it just a minute ago, so hold on just a second. There we are. Okay, now yesterday's low in the wheat was at 496, and today's low in the wheat was 497. So it was within a penny or so. That was the exact 786. So what I'm doing is I'm watching the wheat here, mainly because of the weakness that we're having in gold and silver. These funds, first of all, hedge funds and mutual fund, well, most funds for commodities, of course, but they have gotten hammered. And as Rich Anderson told us last week, whenever they have a really bad day or a bad week, they halt trading. And the reason why is they do not want to have their track record look really bad. And so they stop trading. If they're down 4% for the month, they stop trading. Because if they go down 8%, that's a red flag to anybody that's looking, to trade, because that's the wrong thing to do, is to have a huge drawdown like that. Now, sometimes it'll happen and you don't have any control over it. But as a hedge fund manager, you try not to let that happen to you. It's not about the money that you can make, folks. It's about the money that you don't want to lose. Remember, winners think, how much I can lose. They're always concerned about what their risk is. Losers think, how much can I win? That's why when you walk into the casinos, you see these giant slot machines and everything else is beckoning you to come over and put $1 in to win $1 million or $380,000 or something like that. But that's what that is. It's just a little game. I bought a little toy slot machine for my grandson Avery last year when we spent the week in Christmas week. We went to the Borgata in Atlantic City, took the family there for some fun, and he was really enthralled with the lights of the slot machine. So I went into the little gift shop and I bought him a little toy shot machine, and I showed him that you put the money in, but the money doesn't come out. And every time I see him, I ask him, what happens when you put the money in? He says it doesn't come out. So what you want to do is to try to put a little money in, but don't put all your money in. I don't know if you know this or not, folks, but about 10 years ago, the Las Vegas casinos had credit cards hooked up to the slot machine so that people could put their credit card in. That lasted less than a year because of the bankruptcies that happened. I mean, they just wiped people out, and there was a lot of lawsuits involved with it, so you don't see those anymore. And that was a really bad situation, because here you have someone that probably has a gambling problem, and they have their access to their bank account immediately, and so now they've stopped doing that. So we need to remember that that's what we're looking at. So, okay, well, we backed off a little bit on some of these things. I don't know if it's going to be like yesterday or not, but we'll have to wait and see. We've got gold getting closer to my buy price at 1108, and I am going to buy it there, folks. If I can sell it at 1170, I can buy it at 1108. That's all I can tell you. I don't know if it's going to work or not, but I have to do it. That's just, and it's a big move down, and it's a really strong trend and everything, but I have to buy 1108 with a $10 stop. Might lose, but that's what I'm going to try to do. When I look at this bar, I'm probably going to reconsider this, because I don't like to go into these long-ranging bars. I just give you a lecture on handling risk, and here I am dancing with the devil. So what I'm going to do here is, I don't want to buy it on the first day. This is the fourth day down in gold, so I'm going to pull my buy at 1108 in the gold market, only because we're collapsing down so very, very much. And, silver's back near the lows again. The lows were they changed the low from 1108 to 1110.5, which is, that's rather strange. But I just noticed that. I just got to notice that the low had been changed on December silver for to 1110.5. I had saw a trade. I saw a limit minder came on at 1108.5, and I'm going to have to check and find out what happened with that. Oh, we got a caller from one of our good friends, Victor in New Jersey. Victor, how are you?
Yeah, how you doing? For FCX, you have a gap from 690, and the next day it opened at 750, going back to December 2008. And right now FCX is, I think, at 785. Is it going to? Would you buy it once it gets into that gap, or it can go even lower?
Victor, and we're going to be on a break here in just a second, but I'll pull up. That's Freeport McMoran, right?
Yeah, it's into the gap of 2008 December.
Yeah, I would wait, and the reason for that is the fact that we're in such a critical time here in all the markets. Yeah, of course it could go lower, and it would be better to buy it at a higher price, and then you have the confidence in knowing that the bottom is in. You don't have to catch a falling knife on this one.
It could
you
go
know what
PK.
I mean? Excuse me, please.
On the Aussie, it could go bankrupt then too. I guess you're saying too.
Oh,
hey, on the Aussie dollar.
Victor, you ever hear of Enron, WorldCom, Global
Those
Crossing?
are good companies, aren't they?
Yeah. Oh, yeah, that's right. These are the
General
same
Motors
things.
went bankrupt how many times? How many times did General Motors go bankrupt?
That's right.
They're back
During
at
the
IPO
Depression,
price.
During the Depression, American Telephone went bankrupt twice, and that's telephones, and everybody has a telephone.
Would you buy on Ford? The point and figure chart says $5. Would you buy that Ford right now, or stay away from that too?
I would stay away from any stocks right now, only because of the overall of what the market's actually doing. You got to be extremely careful here. That's the bottom line of what
it's going to really settle out during Rosh Hashanah and Rosh Hashanah. Those two holidays is when everything cleans out. You know what I mean?
Those are my favorite holidays. The old adage. You buy on Rosh Hashanah and sell on Yom Kippur. That's an astrological cycle out of the Bible.
That's when the market double bottomed. It bottomed right around there in 2009. You had to pull back in 2011 during the Jewish holidays. The first one, it got cleaned out, and the second one, you know what I mean?
Yep. Thank you for calling in, Victor. But let's wait on the Freeport McMoran. Okay.
All right, thank you, sir. Bye.
You bet. Thank you for calling in.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks. And I wanted to finish the show here about the astrology cycle of Rosh Hashanah and Yom Kippur. When I traded on the Florida Exchange back in 1982, I cleared through Barry Lynn's company, and Barry was a really good friend. He was killed a few years ago in Palm Springs, California, helping a stranded motorist. Got hit by a drunk driver and was killed at the age of 77. Life short-lived. What a wonderful man. But he told me about this cycle that his father had told him that you buy on Rosh Hashanah and sell on Yom Kippur. And if you go back into the Hebrew Bible and look at it, it's basically an astrological cycle based on the full moons and new moons, 7 days before, 7 days after. And then we did a lot of research on that, Jim Twentyman, myself, and we certainly found out that it had some very good hits as far as working. Now, sometimes you want to be a seller of Rosh Hashanah and a buyer on your Yom Kippur, depending upon whether it's an up market or down market, but the cycle certainly has some good probabilities for success, but that neither is here nor there. Now, we do have Thursday, the 28th is Friday. We're going to have a super full moon, which is the Earth is at perigee, is close to the Earth. The moon is close to the Earth as it gets. So we're going to have a lot of activity there. But today's also a key astro day. You want to keep an eye on that today also, because if we close really strongly today, we could be looking at much higher prices. And if we go back down again, we could be looking at lower prices. It's just you're rolling the dice right here with these markets. You've got to look at the patterns, and when they get overbought, you've got to buy them, sell them, and when they look oversold, you have to buy them. That's the bottom line of what you're trying to do. We're going to keep a really close eye here on gold and silver these next few days. The Treasury bond and Treasury note markets have definitely turned, folks. We're down more than 5 handles now in the bonds. And there's been, no matter what happens, there's no more flight to quality in bonds. When the market was falling apart yesterday, bonds was falling apart with them, which we expected to happen, because the real problem is in the credit market. It's not in the credit and bond market, credit default swaps. It's not in the stock market. The real money is in the credits. Okay, that's it. So live every day in an attitude of gratitude and do something kind for someone who has a lot less than you today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.